Hello, everybody, and welcome to our quarterly AFC Fund webinar. My name is Thomas Hooker, in Arabic, Abu Dhabi, and I'm the CEO and founder of Asia Frontier Capital. With me today are Ruchir Desai in Hong Kong, who is managing with me the AFC Asia Frontier Fund. Ahmed Tabaqchali, the chief strategist of the AFC Iraq Fund, is today in London. Scott Osheroff, the chief investment officer of the AFC Uzbekistan Fund in Tashkent, Uzbekistan, and Vicente Nguyen, the CIO of the AFC Vietnam, joins us from Ho Chi Minh City in Vietnam. If you want to meet with Ahmed in London, he will be there until 4th of August and we'll be happy to meet with you. This webinar normally lasts about 45 minutes, and thereafter you will have the opportunity to ask questions during our 30 minutes Q&A session after the presentations. You can submit your questions online through the Q&A icon at the bottom of the Zoom window on your laptop, PC, or mobile phone. However, today the presentations will take more than over 45 minutes, since we have a lot of exciting information to share with you today. The last few weeks were all about terrorists and the continued military conflicts in the Middle East and in Ukraine. After a weak month of April, the markets, however, have globally recovered lost grounds. But it is really difficult for me to understand why frontier markets and value stocks are still neglected by global investors. But on the other hand, stock markets in the developed world are trading close to their all-time high valuations. For example, our AFC Asia Frontier Fund trades now at an all-time low PE of only 6.4 times, compared with the all-time high PE of around 17.5 times back in 2016. This is, in my view, a great entry point with limited downside. Ruchir, over to you for the outlook for the Asian frontier markets and the AFC Asia Frontier Fund update, please.
Great, thanks, Thomas, and welcome everyone to our regular quarterly webinar. So I'll just get right into it. Just as this basically the slide shows, and as Thomas mentioned, it's been quite a volatile time, not just this year, but for the last probably 18 odd months with geopolitics and what's happening, tariffs, etc. So if you look at the chart on the top left, our markets, had a pretty soft start to the year. For example, many of our key markets like Sri Lanka, Pakistan, Vietnam, Bangladesh were all negative in dollar terms until the end of April 2025. But I was not really surprised. I was expecting the markets to be a bit soft, especially in the first quarter before the April 2nd tariffs, because many of our markets and even the fund did very well, especially in the fourth quarter of 2024. So the year ended on a very strong note. For example, Sri Lanka was up 21% in December. Pakistan was up about 30-35% for the fourth quarter of last year. Kazakh and Georgian stocks did well. Iraq did well as also because we have exposure to Iraq to the AFC Iraq fund. So overall, a very strong finish to the year. So I was expecting the fourth quarter to be anyway quite soft as the markets cool off a bit. And so I was not too concerned because at the end of the day, fundamentally, not just the companies, but even the macro stories in South Asia, Central Asia, pretty strong. Bangladesh, Pakistan, Sri Lanka all recovering from macro crisis. Central Asia has anyway got pretty decent macros, and Vietnam is also seeing a bit of a recovery now. So as the chart on the top right shows you, despite all these concerns about tariffs and geopolitics and tensions in the Middle East, we've seen exceptionally strong returns ever since the end of April 2025. So basically, almost over the last 3 months, you've seen very strong double-digit gains for many of our key markets, Pakistan, Vietnam, Sri Lanka, all up more than 20% dollar terms since the end of 2025. And this is despite all the noise about tariffs and where tariffs will be and the uncertainty over what's going to happen beyond 1st August with the tariffs, etc. So again, I'm not surprised. Like I said, fundamentals for the companies and the countries are pretty solid and pretty strong. Seeing a good, strong earnings recovery, good macro recovery, inflation's low, valuations are attractive. So momentum has, and in the last webinar, I mentioned I expect the momentum in our markets on the fund to pick up in the second half of 2025, and that's exactly what's happened. So we've seen momentum pick up and the re-rating continue from May 2025. So I expect that to continue going forward as well, because I think all the important factors like lower interest rates, macro turnaround, earnings growth, attractive valuations are still all in place. And Bangladesh is a market which I spoke about I've been speaking for the last couple of quarters, but I think I'm even favoring it more now. I'll speak about that a bit more in my upcoming slides. So pretty decent start for the year so far, and I expect this momentum to continue into the second half of 2025. The next slide, please. Yeah, so I mean, it's not just about the last 6 months or the next 6 months or the last 12 months, but if you look at the chart on the top left, performance has been very strong for the last 5 years. So you had in the last 5 years many global events like the pandemic, the war in Ukraine, a very aggressive US Fed in 2022 and 23, the tensions and war in the Middle East over the last probably almost 2 years now. But despite that, annualized returns in dollar terms, total returns in dollar terms for the fund have been more than 12% in the last 5 years. Has outperformed all the emerging and frontier market indexes in a pretty significant way, or in a very nice way. So it just reflects the fact that one, obviously, our markets are quite resilient despite what's happened on a macro and geopolitical basis, but also the companies that we invest in are also fundamentally sound and also quite solid. And also comes down to our stock selection and the way we manage our top-down and country allocation as well as stock selection for the fund as well. So, and that's reflected in the in the kind of uh, awards we're winning. So, for example, we won the Frontier Fund won two pretty big awards just a couple of months ago at the Asian Invest Asset Management Awards, where we were the winner in the emerging market equity category and the runner-up in the Asia ex Japan category. So, two awards in one night. So that's pretty impressive, and it's basically it shows how well the team is doing in executing strategy. The next slide, please. And yeah, I think a lot of talk about tariffs and what's going on and what's not going to happen. What's going to happen is going to be 15%, 20%, 35%, 40%. I think no one can really tell. But I think just the big picture view, which I spoke about, I think we've been talking about this now for the last 6 or 9 months in our webinars and also in newsletters. In general, most of our markets are not very exposed to US trade. So for example, as this chart shows, exports to US as percent of GDP for many of our markets, especially South Asia and Central Asia, and also for Iraq and Mongolia, is quite low. So yes, I'm not trying to say that if government exports from Bangladesh or Sri Lanka to US decline, there will not be an impact, but it's all relative. I mean, Sri Lanka's exposure to US as a percent of GDP in terms of exports is 3%. Bangladesh is less than 2%. Pakistan's about 1.3%. So it's not, I would not say it's a game changer. Yes, it'll have an impact, but it's not going to be a game changer. It's not going to be that, for example, if Sri Lanka is supposed to do 4.5% GDP growth this year, and because if tariffs remain at 30%, that 4.5% GDP growth will become 3%. I doubt that. Because the factors driving the economic growth, especially the economic recovery in many of the South Asian countries like Bangladesh, Pakistan, Sri Lanka, are more domestic. Domestic reforms, lower interest rates, lower inflation, just demand coming back from a very low base, because all these three countries have had a tough time for the last 3 or 4 years. So there's so much low-hanging fruit just from an economic growth perspective. So if exports, remain soft for a year or so, I don't think it's going to really have a major impact as what people fear. And that's also reflected in the markets, right? So ever since, in fact, the markets have been rallying since April after the tariffs were announced. A very strong rally in Sri Lanka and Pakistan and Bangladesh also the last 2 months, very strong rally. Also Vietnam, very strong rally. Of course, they got a deal, but across all these four markets, very strong rallies. And I guess the market then anticipates that the impact will not be that high. So again, I think the bottom line is exposure to US exports is not very high, and many of our economies and markets are more driven by domestic policy making and domestic reforms and domestic demand. Next slide. So I'll just kind of walk you through some of the calls we made at the end of 2024, which we do every year. So at the end of last year, basically we mentioned one of our top country picks for the year. I would say not just this year, but also going forward next 2 to 5 years, Sri Lanka. So it's done pretty well, despite the fact that last year the market was up in dollar terms 45%, and in 2023 it was up about more than 50% dollar terms. So this year it's up about little more than 18% for the year. But even though it's up 18%, and have 2.5 years strong performance, valuations for the market are still much below. I would say now still slightly below pre-crisis levels. For example, the P for the Colombo index is at about 11.7 times, but historically pre-crisis in 2014, 15, 16, the P ratio is about 14 to 15 times. So still room to grow, but also on a bottom-up basis. For example, many of the banks which are doing very well now still trade at much lower than price to book ratio, despite their return on equity and in general their fundamentals going back to pre-crisis levels. So yes, the market may not look as cheap as it was maybe 2 years ago, but on a bottom-up basis, you still have some good, juice in many of these stocks that we own, and also that are present in the market. So overall, it's been a broad-based recovery in Sri Lanka. Tourism has bounced back very strongly. You've seen manufacturing actually come back, construction actually has recovered. Private sector credit growth growing at 15-16% year over year so far this year. So it's very strong growth across the board. And it's not just from a low base and because of low interest rates, but I think more critical is not just the economic stability, but also the political stability that came through in the fourth quarter of last year after the presidential and parliamentary elections. That is what was missing for Sri Lanka. I mean, the last 5 or 6 years, they not had economic stability or political stability. Now you have both economic stability, in fact, a strong economy, and also political stability. So that's really helpful, just from an investor sentiment perspective, and especially from a corporate business sentiment perspective, in terms of making capex decisions or expansion decisions. And that's why you've seen a recovery across the board in Sri Lanka in the last probably 6 months. Next slide, please. And yeah, just sticking to Sri Lanka because it's one of our top picks. Yeah, so I was on the ground in Sri Lanka and Colombo last month. And as I mentioned, there's a lot of confidence on the ground. I was there in December as well after the elections. You could see the optimism improving, and it's only improved or incrementally increased in the last 6 months since I was there. So across the board, cement companies, consumer companies, banks, construction companies, policymakers, all very optimistic, or much more optimistic, or compared to maybe a year ago, or even 6 or 7 months ago when I was there. If tourist arrivals, as I mentioned, are pretty strong in Sri Lanka right now, and they should be doing about 2.5 million tourists, which is their all-time high. But still, I think it's very low. They can do much more than that. They can easily get to 3.5 in like 3-4 years if they improve some of the infrastructure in the country. And also GDP growth, as the chart on the top left shows you, is still pretty strong. They did 5% GDP growth in 2024, which was well ahead of expectations. And the first quarter of this year, they're doing about 4.8, and second quarter, they could do about 4.5. So pretty strong momentum across the board in Sri Lanka. So yeah, I continue like this market going forward as well with the 3 to 5 year view. The next market I'll talk about is Pakistan on the next slide. Also one of our top picks, also did very well for us in both 2023, especially 2024. The index was up 87% in dollar terms, and most of the returns came in second half of last year. But despite that, the market still had a pretty good run so far this year, up a little more than 18% in dollar terms. Again, most of those gains have come since basically mid-May, second week of May, so the last 2 months. But I'm not surprised by the recovery in the market in the last 2 months, because the macros are stable, inflation is low, interest rates have been cut from 22% to 11% in the last 12 months. So the positive impact of those lower interest rates will only be felt in the second half of this year in terms of earnings growth, in terms of economic sentiment, in terms of overall GDP growth. And similar to what you saw in Sri Lanka, Central Bank of Sri Lanka began cutting interest rates in second half of 2023, but the real impact was only felt towards second half of 2024 and also this year. So I expect the same thing in Pakistan. I expect momentum to pick up second half of this calendar year, and especially in 2026. And also the current account is in surplus first time in 14 years. So overall, they're in a pretty decent spot compared to, historically where Pakistan has been on a macro basis. So I think for the next, I think this year as well as for 2026, I think the macro should be pretty stable, and the market should continue seeing a decent re-rating. Not like last year, but I think there's some good stock selection opportunities, especially in cyclical stocks as interest rates come down and economic growth recovers. So I think Pakistan should be okay should see good returns going forward as well, next couple of months or next couple of quarters. Next slide, I'll talk about Bangladesh, which is a market I'm quite excited about. I was a bit early in saying that it's bottomed out, and it's a good opportunity. But finally, I think you're seeing a pretty good rally in Bangladesh. Market is, in fact, for the last 3 years, the market is down about 50% in dollar terms. I think the market bottomed out basically end of last year. And I've been positive on the market since end of last year. So end of last year in December, I mentioned it will be the dark horse for 2025, especially second half of 25. And basically the rally has begun from June. So since end of May, the market's up almost 16% in dollar terms. And this month itself, in July, in the first 3 weeks, it's up, I think, 11 or 12% in dollar terms. So pretty strong recovery. And Again, it's basically, I think which I've mentioned before as well, Bangladesh is in a similar position to where Pakistan and Sri Lanka were maybe 2.5 years ago. Economies bottomed out, valuations bottomed out, sentiment on the ground was very weak, but you're seeing incremental positives. Inflation has peaked out, in fact, it's coming down. Interest rates have peaked out. The current account is in surplus. FX reserves are increasing. Remittances have come back. The currency is kind of stabilized. Exports are doing okay. But more importantly, I think the interim government has called for elections at some time between February and April 2026. So I think that was one of the key triggers for the market in the last couple of weeks. But besides that, even the 10-year bond yields or government bond yields have been coming off. And we've seen that in other markets like Pakistan and Sri Lanka, when those yields start coming off, in the stock market starts doing well. I mean, it happens in most markets, basically. I've seen the same thing in Bangladesh as well. But again, I think the valuations are just very attractive across the board. If you look at the blue line on this chart, P ratios are well below historical levels, and the market, actually in dollar terms, the market is basically half of where it was at the peak in 2021. So in dollar terms, it's still half of where it was basically, if you include currency depreciation. So I think Bangladesh can still be the dark horse. I would stick my neck out and say you could see a pretty strong rally in Bangladesh, not just this year, but especially next year as demand comes back, you have the elections and you have economic momentum pick up. So this could be, in my view, could be a star performer for the fund and also in frontier markets for the next 18 months. The next slide, please. Yeah, Central Asia, has been pretty solid for us, not just this year, but the last couple of years. So even end of last year, we mentioned Central Asian stocks could do well. Of course, there was some momentum with respect to the geopolitical situation in Ukraine in the first probably 3-4 months of the year, but obviously now things are a bit uncertain. But despite that, earnings growth for our companies, especially the banks in Georgia and the banks in Kazakhstan, have been very solid. GDP growth in Georgia, despite all the political noise, very strong, almost 10% GDP growth so far in the first 5 months of 2025. So very strong returns. And all these, I would say, both TVC Bank and Halik Bank are in our top 10 positions for the fund. So pretty solid. So overall, our calls have been pretty solid. I mean, they've come through so far this year. And I expect the momentum to continue pretty much, especially in markets like Bangladesh and Sri Lanka and Pakistan. Next slide, please. Yeah, so just coming to, the fact that if you look at this chart, the maroon/red line is basically the NAV of the fund. And we continue to reach all-time high NAVs. We reached an all-time NAV in December 2024, and we reach all-time high NAVs pretty much every month so far in 2025. And even in July, the fund is up about more than 4%. So another all-time high NAV, but the P ratio is still quite low. In fact, almost all-time low at about 6.2, 6.3 times. So I think there's still a lot of room because of the fact that many of our markets had some of them had macro crisis or political crisis, or you had issues with interest rates, etc. The P multiples have really got derated. So, for example, there's a lot of room for P multiples to expand in places like Pakistan, Bangladesh, Sri Lanka, Central Asia, etc. But at the same time, bottom-up fundamentals are still okay. So you've seen earnings come back pretty nicely in Sri Lanka. You're seeing earnings come back in Pakistan. So earnings growth has been also pretty solid, as also in Central Asia. So that's also kept the valuations a bit low. But overall, basically, my point is there's room for multiples to expand, and that could drive another leg of returns for the AFC Asia Fund besides just earnings growth and the macro story and macro recovery and lower interest rates. So a lot of room for expansion, a lot of room for returns to run, not just for this year, but I would say over the next 4 or 5 years. Next slide, please. And yeah, I mean, this is also less about the markets and stock selection and the markets we like, but more about our process basically. So I think being on the ground, meeting companies, meeting policymakers, just seeing what's going on in various countries that we invest in is very critical or very crucial to our investment process, especially our research process. So so far this year, both Thomas and myself have been to multiple countries. I was in Bangladesh and Vietnam in February. I was in Uzbekistan with Thomas and Scott. Thomas was in Iraq with Ahmed, also in May. I was in Sri Lanka last month. Next month, I'll be in Bangladesh. In September, I'll be in Kazakhstan, Vietnam. So this is just an idea as to it's not just sitting on Bloomberg or analyzing balance sheets and reading annual reports, listening to analyst calls, but also being on the ground, which really gives an idea what's going on in the country. So, I mean, this is just some snapshots. For example, I was in Dhaka. So the picture on the extreme left is the Dhaka metro. It's pretty new, pretty modern. Then you have FPT Software, which is part of the FPT company in Vietnam, which you own. It's the biggest software outsourcing company in Vietnam. So this is the development center in Ho Chi Minh City. And this was in the next pictures from Tashkent and Uzbekistan. It's a local bazaar. It's pretty historic, pretty well known. And then the last picture is that's me with the governor of the Central Bank of Sri Lanka in Colombo just last month. So this gives you an idea. We meet policymakers, go meet companies on the ground, see what's happening in the country on the ground, basically. Just a snapshot of what basically we look for and what we do in terms of our process. And I just want to wrap up by saying that, yeah, I mean, I don't want to repeat what I've said before. The fundamentals of the portfolio are very solid, low P ratio, high return on equity, strong earnings growth. We expect a momentum to pick up in second half 2025. That's happened. Sri Lanka is one of my top picks for the next 3 to 5 years. Bangladesh, I think, can show very strong returns for the next 12 to 18 months. Pakistan should be okay from a cyclical perspective. So overall, I like South Asian and Central Asian stocks because they're more domestic driven and not so more exposed to US exports. So I think overall, I think not just the next 6 months, I think the momentum in our markets and also especially the AFC Asia Fund should continue into the next couple of years. So with that, I'll hand over to Ahmed Tabaqchali, who is the chief strategist of our AFC Iraq fund. Over to you, Ahmed. Thanks.
Thank you, Ruchir, and thank you all for attending this webinar. Well, can I have the next slide, Peter, please? Well, June was an exciting time for us. It marked the 10-year anniversary of the Iraq Fund, of the launch of the fund, actually. The inception was a year before that, but overall, the launch has been 10 years since then. We were hoping to have an all-time high achieved in June. However, June was slightly off the all-time high for both the fund and the market versus the May high. However, as of July so far, and also so far 25 days in the month, 24 days in the month does not make a month yet. However, it looks like we are at a new high for both of them should the trend continue till the end of the month. Okay, so the thing is with the 10-year anniversary, and the reason why we're highlighting it is basically to highlight a number of things. First of all is the fact that when the fund was launched, we was almost like a perfect storm for the country. In a sense, the launch was a year after inception. The inception was immediately following the takeover of city of Mosul by ISIS, and then with it, the conflict with ISIS, which threatened the country's breakup. And if that wasn't enough, we've had the crash in oil prices, which threatened bankruptcy in the process. Maybe it was the right time of it, at the right process. And the thing is, if you look at it right now, the fund has had a tremendous performance, but the market itself has mirrored the country's trials and tribulations in a way over the last 10 years and so forth. So the ISIS peak, the pre-ISIS peak was followed by a 7-year bear market. The market was down collectively cumulatively something like 66.6% during that time, and followed by massive recoveries. And I think the thing which underscores here, and I'd like to highlight in a way for many of us looking at the market, is two things. First of all, is the concept of the value of actually persistence and investment in frontier markets when you know the fundamentals. Patience and the fundamentals are pretty crucial, and we believe we've delivered on that. Yes, we've had a tough first few years in the market. However, the decisions made then have been the ones that gave us the performance here, which basically underscores that frontier markets can go through periods of weakness, of no movement, no action, even though the fundamentals can be, if you look through the troubles, the fundamentals can be looking fairly fantastic. And that's what we believe the case is here. Now, it's quite fitting in a way that given the history of Iraq and the decades of conflict, it's quite fitting that the 10-year anniversary happened just when a second perfect storm was about to happen. Okay, Iraq was not involved, but it could have been easily involved or engulfed by that, which was the Israel-Iran war, which thankfully, at least as of now, ended in 12 days. And without affecting us in any way as yet. However, having said that, Iraq is a very, very different place. And if I can have next slide, Peter, please. The risks of the war are real, i.e. they could erupt again, given the fact that things are very fluid and changing in the region during all that time. However, as I said earlier, Iraq is a very, very different country today than it was 10 years ago. 10 years ago, the country was very fragile, was very weak in more ways. The institution was weak. The economy was still very weak. Right now, the country is enormously different than it was then in more ways than one. We've discussed the drivers of the last performance of the last couple of years, which basically I don't want to repeat them because I think I've maybe bored quite a few of you enough with that or discuss enough. But basically, it's worth reiterating how different these dynamics are. One is the relative stability, and we'll see visions of that in the next few slides, but relative stability, which brings enormous benefits to the country that are yet to be fully appreciated. And second, the structural dynamics, basically in the change in the banking system that enables adoption of banking. As all of you are aware, without adoption of banking, there is no private sector, and there's no, with the banking and a private sector, then we have phenomenal growth potential that country can have. Next slide, Peter, please. Now, before going into showing you visions or images of what Iraq looks like and how different the country is, worth mentioning a third perfect storm. Maybe the word a perfect storm is wrong because it could be a perfect calm, it could not be, but basically it's I think the best phrase for it would be a messy storm, which is i.e. the tariffs. As discussed in newsletters in the last few months, the direct implication for Iraq are none, since Iraq exports oil, only oil, and oil is not subject to tariffs. However, it could be felt in lower oil prices should they affect global growth, and that would affect us negatively. The charts I have here for you basically is the same ones I provided continuously over the last few months, with one difference is current expectations as of last week are actually substantially better than they were immediately after the release of tariffs. At the time, they were actually just, the yellow line was just touching or just below in a little bit than the gray line. So it tells you basically that the market has sort of discounted the effect of, well, most of the effect of the tariffs, or discounted the tariffs as well as potential deals, because we keep on hearing day after day deals, or more like frameworks of a deal, which there, and also that is in spite of the negatives of sharply increased production by OPEC plus over the last few months. The basic picture is higher oil prices over the last couple of years have delivered a phenomenal tailwind for the benefits that the countries enjoy, the two drivers I mentioned earlier. As when the tariffs came in, these were clearly becoming a headwind, but the point right now is that this is a much less headwind than expected, and so therefore a removal of a small negative or a medium-term negative. Next slide, please. Now, with the 10-year visit to, with the 10-year anniversary of the Iraq Fund, marked the visit by my colleague and friend Thomas, who came to Iraq and back, and will join me in a minute or so on giving his view on Iraq. But basically, the point that I already want to highlight is Thomas arrived in Iraq coming in straight away from his visit of Uzbekistan, and also he arrived very late in the morning, early hours in the morning, and I was not there to pick him up. I've arranged for one of the airport companies to pick him up. He was picked up, delivered to a hotel in Baghdad without the super security hotels that most Western visitors go to. And we traveled in Baghdad. We had, first of all, a tour of the business in Baghdad, which was featured in our newsletter of June. And we did a cultural tour of Iraq, where we traveled the old part of Baghdad. We saw Ur, the location of Ur, the marshes, the largest city in Baghdad. We traveled all of this basically while we were in Baghdad. And in most places, we traveled using something called Kareem, which is a company that's owned by Uber. We traveled with a friend in a normal car. We traveled just like any other person. And I think Thomas, as he will discuss right now, did not see anything that all of you might expect to hear about Iraq. Oh, extra security, extra this, extra that, how dangerous the place is. None of that were there. However, I will leave leave it to Thomas now to give his impressions. Go ahead, Thomas, please.
Actually, I was really very impressed by the underground situation in Baghdad and the countryside, which we have visited together, especially Basra, which is in the south of Iraq, nestled between Iran and Kuwait, which was really hit very hard during the various conflicts affecting the country since September 1980, when initially the Iraq-Iran war started. So Basra was bustling and has recovered visibly. Some of the infrastructure has been already put back in place. For example, many of the highways we used were even better than some parts of the German Autobahn today. And there are everywhere works in progress in the country taking place to upgrade the infrastructure even more. Also, construction works of private investments like apartment towers, office buildings, and shopping centers are visible everywhere. I think it's on the next slide or somewhere. You see that the scenery. Lastly, the security situation was for me good, and as a frequent visitor to other underdeveloped countries, I walked around freely and felt all the time safe. And the Iraqi people were really very friendly and keen to talk to me when they discovered me. It was very obvious when they recognized me as a foreigner. With the exception of the area around the Baghdad airport, which is on the Istanbul, there were no security checks on the roads in Baghdad, and in the city there was hardly any police or security staff visible. I think less security than if you go to visit New York or London. I basically felt like in any other city in the Middle East. I sincerely believe now that the Iraqi stock market's recovery that we have witnessed over the last 2-3 years can continue, since the economic turnaround of Iraq has just started, in my view. And this will run not only for a few years, it will run for decades, in my humble view, since there is so much to catch up from an economic and infrastructure point of view after 4 years of hardly any investments in the country. And Iraq has the money, since the country has proven oil reserves, which will last at least for 90 years at current production levels. And last but not least, I plan to visit Iraq next year again if Ahmed has time to show me around the country again. Thank you for giving me this opportunity. It was very interesting, Ahmed, or Maan.
Well, it was a pleasure. And what Thomas shared with you, by the way, is we gave him an Arabic way of calling people, in the sense that almost all adults are given a name that named after their firstborn. So it's either Abu something or something. So in Thomas's case, it's Abu Dhabi, and we gave him that name, and we started calling him throughout, and we developed that. And also, while visiting Baghdad, he discovered my other name. My name is as you know, Ahmed Ma'an, but it's a double name. At home, I'm called Ma'an, and so therefore we started using a second terminology. If I can have the prior slide, Peter, please. I'll go through quickly, but then without too much. Okay, so the first slide is we visited the Iraq Stock Exchange, which you can see the pictures on the left. Now, obviously, it was interesting for us. It was the last day of the month, and so we were able to watch the markets close, which happened to be a very strong market close in May, when trading volumes are pretty high. However, as you can see, it's fairly quiet because with the advent of electronic trading in 2009, almost everybody moved to either sitting in brokers' offices or trading online. One of the interesting observations that I have personally on the exchange, or at least on local Iraqi investors over the last 10 years since the fund was launched, is the number of new investors joining in the market. When we first started investing, it was mostly old people, sort of my age and plus. Also, during various works, when we had the opportunity to work on the government economic reform program in 2020, the government didn't know we had a stock exchange, or most people in the government didn't know we had a stock exchange. Most Iraqis had no idea what a stock exchange was, or if we had one. The last couple of years, the gains that have happened have created the new people who are interested. Now, obviously, a lot of them are still learning the process and understanding the market, but that's fairly crucial because the country has enormous amount of wealth in terms of disposable income. Most people have in the past invested either in gold or in property, which have been great, but nobody has invested in equities as such. And most brokers tell me that number of new accounts opened up are fairly large, and the great interest in those. Now, obviously, that should it continue, it should help us in terms of liquidity of the market and also increase turnover and so forth, which is something we've seen, by the way, significantly over the last few months. Okay, we're talking from relatively low basis, and we're talking for shallow frontier market, but nevertheless is taking place. So anyway, we had that. Thomas was, as you can see here, taking pictures next to the National Theatre roundabout, which is like one of the old parts of the eastern side of Baghdad, Rasafa, and we introduced him to Iraqi food, which you can see a picture of, and sort of increase the appeal of the country through its cuisine. Now, next slide, Peter, please. I think, Peter, can you hear me? Next slide. Or it's not happening. Okay, so next slide, you can see, by the way, two aspects of what Thomas has mentioned. The first is on the left-hand side, are a collage of pictures from our first night in Baghdad. No, sorry, prior ones again, Peter. That was too fast. Yeah, so on the left, what you see is basically us walking about. We went on a walkabout in the street in one of the busiest places in Baghdad called Four Streets, in an area called Yarmouk, which is in Karkh on the western side of Baghdad. And we were going out at night. Nobody actually even paid attention to us, even though even though I'm Iraqi, I look somewhat foreign. Nobody paid attention to us. The street was busy, full of people as usual, and with shops and stuff open till, I don't know, 2, 3 o'clock in the morning. And you can see families walking about, kids and adults, and sort of groups of men, groups of women, all of them working together and traveling about, which underscores security situation in Baghdad, which is very different than the one I first saw when I first came back and started staying in Baghdad in 2017. A massive difference since then. On the right-hand side, you'll see the pictures of the construction activity. And this is, by the way, something that is now actually a feature in Baghdad. We started talking about it a couple of years ago, but now it's very much a feature. The top picture in the middle shows you the biggest mall that's been undeveloped in Iraq, which is probably the biggest mall in the region. It's massive. I've got no idea how big it is, but it is huge, and probably will take pictures there. What Thomas discussed, in a sense, when it says like the demand for, the build for housing and so forth, you got to keep in mind, by the way, the country has 4 decades plus of underinvestment, but not only underinvestment, but destruction of infrastructure. There's none of it, and yet the population has grown significantly since then. So the drivers and the need for construction is huge. Should the stability built on, and we think it will be upon on, you'll see demand drivers are domestic. We don't need, not much, for example, like the case in Dubai, which it needed foreign people to fuel demand. With us is just domestic demand by itself is massive. A country of 46 million people growing at 2.3% per annum, which is fairly large, hopefully with support by oil revenue. So this is something which should last over a number of years and expand from the big cities. We'll discuss Basra in a future newsletter, but we'll see the rest of the cities experiencing the same thing. Next slide, Peter, please. And one of the visits we've seen one of Baghdad's or Iraq's top companies, company called Baghdad Soft Drinks, which is a Pepsi bottler like everywhere else. And you can see on the left-hand side some pictures while we were there. The equipment is all modern, fully automated, robot and electronically driven and what have you. And it's probably the plants are probably the largest and the best of their kind in the Middle East, which is not something you expect to hear from Iraq. Interesting enough, the chart on the right-hand side, which shows you the revenue, both revenue growth as well as net margin growth, it's been growing consistently since 2011. It had a dip in terms of margins in 21, COVID, as well as the invasion of Ukraine, which helped, which did not help with raw material costs, but that recovered really, forgive me, very significantly since then. Now, this kind of growth is, as I said, we like it, and I think this is one of the interesting things about the country. But the, forgive me again, the valuation disparity between it and peers is fairly significant. Okay, there always should be a valuation disparity because every market is different in terms of market size, addressable market, level of development, multiple reasons. But surely not at these ridiculous levels, because even if the company is twice the current multiple, its return on equity and its valuation is still significantly cheaper than comparables, even if you allow for no like match of valuation. And this is really where the theme which we keep on discussing is actually arbitraging the gap between risk, which is fairly high in Iraq, versus perceived risk, which is much higher, because assets, even after the market's recovery, are still mostly valued at perceived risk, which leaves a huge room for a catch-up. And also that should, foreign investors which have been absent so far from Iraq, should they come back, companies like this, the banking sector or the strong will see massive inflows of funds. And we'll see the same thing that happened in every frontier market when institutional investors come in and they go out to the best performing name with the largest liquidity and the largest market caps and attractive valuations. And I think last slide, please. And the final slide basically just shows you other aspects of what Thomas mentioned in a way, which basically we went to, we were invited to go to see the reconstruction or actually refurbishment of one of the top hotels in Baghdad called Ishtar. It's on the overlooking the river. But basically it actually meets to meet the increasing demand for hotel rooms in the city. All hotels are normally booked at all times. Most planes that fly to Baghdad, which mostly fly from Amman, or direct flights are from Amman, from Istanbul, from Dubai, from Doha and Qatar, they are almost always full. And there is always demand for hotel rooms. From there, we had a picture. We on the roof, we viewed on the left-hand side, the western part of the city, which is the image at the middle top. Sorry, at the bottom top, which you can see as Karth saying massive recovery. All those cranes are all over the place. The top picture and the right-hand one picture are of Rusafa, which is seeing
Okay, I think Ahmed's signal is broken, so that's on the right-hand side is the place which became very famous when CNN showed during the second U.S. invasion, when the statue of Saddam was toppled down. Okay, thanks a lot. And now the next presenter will be Scott, the Chief Investment Officer of our AFC Uzbekistan Fund. Thank you.
Thanks, Thomas. Good day, everyone. So besides the market continuing to bottom and money continuing to come into the market, there really wasn't that much to talk about specifically about the capital markets. But lo and behold, it's never a dull day in Uzbekistan. So for those of you that have been to the country, been on one of our tours, you've met Karen Srapionov. Well, as of this past Monday, he left officially Avesta, which is one of the brokers that we work with, and he is now the country head, the managing director of Franklin Templeton, Uzbekistan. So he's going to be the one driving forward the management company that has the rights to manage the Uzbekistan investment vehicle, which has about $1.6, $1.7 billion of state-owned assets. So it's roughly 18 state-owned enterprises, and the government's percentage ownership in each of those was thrown into this, effectively this SPV, this national investment vehicle. And the plan is to dual list it in London and Uzbekistan. So regarding Avesta, again, for those of you that have been on the ground or have brokerage accounts, his deputy, basically his senior analyst, who is Shadlik, who's been there since 2019, know him super well. He's been Karen's right-hand man since then, so he's taking over, is the director of Avesta. Otherwise, we expect no change in the operations of the brokerage and are super excited for Karen because, again, for those of you that have met him, it becomes very clear that he's probably, and I don't say this lightly, the most switched on person in the capital markets in Uzbekistan, and to really drive forward what needs to be done in the capital markets. One, he knows what needs to be done. Two, he's been working on it for years, both as MD of Avesta, but also he holds an independent member board seat on the stock exchange, but really he has no influence or voice. Now he's in a position of power for the first company, the first SOE that is supposed to be privatized, dual listed. Karen basically now can speak with the government and in the stock exchange bluntly and say, here's what needs to be done to make this be successful. So it's a huge upgrade for him, but also it's a very big net positive for the capital markets. And by way of default, the Uzbekistan Fund, assuming that this government's privatization program is successful. As I've mentioned in the past, there have been a few announcements for privatization programs, and they've fallen on deaf ears. Now it seems like this one is actually going to happen. And again, Franklin Templeton's management vehicle is going to be the first in line of these IPOs. So that's very encouraging. And of course, we're very happy for Karen, but that should just make the capital markets develop, hopefully, that much quicker over the next 12 to 18 months. So we'll be keeping our finger on the pulse of that and talk about it in our newsletters in the future. But besides that, there really wasn't much that happened in the past few months. But it is worth noting, because this has never happened since we have been doing business in Uzbekistan, is that we're halfway through the year and the currency is up 2% versus the dollar. Sure, the dollar has had its weakest first half of the year in 40 odd years, but nonetheless, this is encouraging in Uzbekistan, and I think this is bigger than just weakness in the dollar. It's sure this, but also rising gold prices, which are record highs. And you have to remember that roughly, well, Navoi Gold, which is the biggest gold producer in the country and is the biggest enterprise in the country, represents roughly 10% of GDP. This year, based on the first half run rate, you would expect them to produce 3.1 million ounces for the year. So this is a big aspect of the economy, and it's the largest export of the country. And historically, the government has been selling gold not only to finance its broader budget measures, but also to support the currency. Last year, they sold, if I'm not mistaken, roughly 6 billion of gold just to support the currency. So the fact that it's up this year, they haven't defended it as much, is wonderful. And again, you look at where gold is likely headed over the next decade. This is very bullish for Uzbekistan. But then beyond that, you've had exports surge as you've had Turkish, South Asian, predominantly Indian and Pakistani companies, but really Chinese companies come in mass. And they're the ones that are building factories and starting to really drive exports. As you'll probably recall, over the past few years, we've talked about country is transitioning to basically rebuild its manufacturing base and reindustrialize from its dilapidated Soviet days. So you, of course, have old factories that have been retrofitted, and you have new factories that are being built through local investors and foreign investors. And now we look to be beginning to see a significant rise in exports as a result of increased manufacturing. And then in line with that, you have more remittances coming in, as the Uzbek government is very focused on sending Uzbeks abroad to Europe, the Middle East, East Asia, so Japan, America, for work abroad, and they're sending remittances back. So this is a big contributor as well to money coming into the country, which is helping to support the currency. So it'll be interesting to see what happens over the next 6 months. But again, we've always budgeted for 5 to 7% depreciation per year, and the fact that the currency's up, along with everything else that's beginning to happen in the country, is very interesting to say the least. So again, positive things going on in the country, the broader region as a whole, but there's some exciting things on the horizon in Uzbekistan, which again hopefully translates to further movement in the capital markets is that it's already bottomed, and we start to see some liftoff and more capital coming in, of which this privatization program, there's a handful of measures that should be enacted to incentivize foreign investors to participate in these IPOs in the domestic market versus London. One of them will be offering potentially a small discount to the IPO price if they do business in Uzbekistan rather than in London. So again, a whole host of catalysts which are potentially on the horizon. So with that, I'll pass it off to Vicente and Nguyen to discuss Vietnam.
Thank you very much, Scott. Go to the next, Peter. So as you know that Vietnamese stock market already surpassed the 1,500 level, is very important level, and it's broke out the new trend. And you know, the increase in the VN index is not only a chance. Actually, it's supported by the strong economic growth. You know, in the second quarter, the GDP growth of Vietnam hit 7.96%. It makes Vietnam to be the fastest growing country in the regions. And actually, the Vietnamese government is very, very ambitious when they set the targets for at 8% in 2025, and even they raised up their targets for the 2026 and 2027 at 9 and 10%. Unlike other previous year, but this time I think the country can be able to accomplish the target. Why? Go to the next, please. Because Vietnam's right now, they're spending a huge of money, $10 billion into infrastructure for the long-term development of the country. So in 2025, the country planned to spend roughly around 30 to 35 billion to invest into infrastructure. So such as the big project like Long Thanh Airport, the North-South Highway, particularly the North-South High-Speed Railway. This project costs more than $60 billion. Yes, more than $60 billion. This is the largest project ever of the country. And Vietnam just finished the restructure the whole country to when they merged on 63 provinces into the 34 province. By this way, the country has to build roughly around 40 new highways to connect the regions. So it means what I can say right now, Vietnam is in, how to say, a very strong public investment era. So the country will spend tens of billions of dollars in the next 5 to 10 years for the long-term investment. And this is really support for the economic growth. And many investors or economists, they wonder if Vietnam can accomplish their ambitious plan or not. We will consider in the next page. Go to the next. You know, Vietnam has very low government debt on GDP. So from roughly 50% in 2016, the government debt to GDP decreasing eventually. Right now, the ratio is around 35% only, and the government plan to decrease this level to 30% in 2026, 2027. So it means the country has very strong balances, and that's enough power for the country to invest into infrastructure. Go to the next, please. And if you look at this thing, this chart, you can see that, you know, actually since 1986, it means more than 30 years. So Vietnam almost has the state budget deficit every single year. Particularly in 2022 is minus $18 billion. But since 2024, the country is focused on on collecting taxes and improve on the tax collecting system. So by this way, the country state budget balance improved very much. In 2024, we have 8 billion state budget surplus. In the first half of 2025, we have more than 11 billion US dollar. That's incredible. This is what I have never seen in my life. And the government plan to have roughly 20 billion state budget surplus this year, and they keep increasing. So that's enough, much enough for the country to invest into infrastructure. And another reason another point I would like to present to all of you, that Vietnam is not only growing any longer. Now it's really transforming. Why? Because the country just issued 2 resolutions, very important. I call it the turning point policy. It is the resolution 68 and resolution 57. Go to the next, please. So what is the resolution 68? Resolution 68 is either the policies that the country will focus on improving private business sector. Vietnam is a communist country. And in the last 40, 50 years, they always target state-owned enterprise is the most important. So everything on the power, on the resource, on the capital of the whole country always pushed into state-owned company. But right now, the top department of the country already issued the new policy. So they will focus on private enterprise instead of state-owned enterprise. And with this resolution, I think the country will completely liberate the internal power potentials. The project I just mentioned, that the North and South Railway, high-speed railway, which cost more than 60 billion US dollar. Only 2 private companies already submitted their proposal to build this project. This is incredible. The first time in my life, I seen a 60 billion US dollar project will be built by a private company. That's incredible. This is I showed you the 2 proposals from 2 private groups. Vinspeed is a subsidiary of Vingroup. And TACO is the largest truck manufacturer in Vietnam. So with this resolution, I think that Vietnam is really transforming. It's not like they spend a lot of money, they attract FDI, and they increase their economy by FDI, by export, everything. So, and another policies is the resolution 57. So what is the resolution 57? It means the country will focus much more on technology, on AI and cryptocurrencies. In the last, I think, 20 years, every year as a citizen, every year I heard on the radio, on the TV, on the newspaper, magazine, the government always say, okay, Vietnam will be an industrialized country. So it means they focus on manufacturing, they focus on FDI, they focus on industrial park, attract FDI, blah, 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 something. Yes, they are still doing that, but it's old fashioned. The current leaders of Vietnam seem to recognize that if they do not improve AI technology or cryptocurrency, they will miss the trend, the new trend of the whole world. So it's reason why they issued resolution 57 to push on this kind of thing. And Vietnam could be one of the first country, maybe after US, they will legalize cryptocurrencies, because under the current situation, they plan to issue the new law, the first law for cryptocurrency in by July 2026. Right now, the whole Congress is composing the law, and they plan to issue it by July 2026. So, as a Vietnamese, I'm really confident that the Vietnam is not only growing, the country is transforming. And I think Vietnam will grow very strongly regardless of all the global turbulence. Even, the deal with US about the tariff, if Vietnam can reduce the tariff to below 20%, it will be very nice. But if we cannot, 20% is keep, I still think Vietnam can grow 8 or 9 or 10% in the next few years. This is why I said the country is transforming. Go to the next, please. Another update is about the EM upgrading to EM market, emerging market. So on 17 July, our PM, the first time, the leader of the government already have an official meeting with the senior director of FTSE to discuss very deeply about upgrading Vietnamese stock market to EM. So I think the EM will, the local investor, not right now they expect that the upgrading could happen by September 2025, or in the latest scenario, or the worst scenario is will be in by March 2026. And as on the previous report and webinar I already mentioned, if Vietnam can upgrade to EM, we will attract around 4 to 6 billion every single year. And it seemed the upgrading could be fast, because recently, after 3 years, the foreign investor they net shown in the stock market of Vietnam aggressively, but recently they started to buy it again, and they bought very strongly. In reason why in July, every single day in July, the trading volume of Vietnamese stock markets surpassed more than $1 billion, and Vietnam become the largest stock market in Southeast Asia, even surpass Singapore, Thailand, Indonesia, and Malaysia, Philippines, to be the largest one in terms of market liquidity, more than $1.2 billion. Thank you very much. Go to the next, Peter. So with all those kind of things, so VN Index already touched, and right now it's surpassed 1500 level. This is very important level. Is a psychology level, is a technical level. So I think that very different against other previous increase and down, increase and down, increase and down. But this time is completely different, because it's supported by a very strong economic growth. And the first thing, the second thing is very strong money supply, because the government already used the loosened monetary policies to support the whole economy. So in the first 6 months, the total credit growth hit around 10% compared to 12% of the whole year, the whole last year. So I think I will not be very surprised if VN Index can reach 1800 or even 2000 in the next 2 or 3 years. So thank you very much for listening.
Yeah, thanks a lot, everybody, for your, as always, interesting and insightful presentations. We will now answer some of the many questions we have already received from the participants, but we won't be able to answer them all, because we, as already pre-warned, today we will overrun our 45 minutes, but you can still submit more questions during this Q&A session through the Q&A button at the bottom of the Zoom screen, and we will answer them later on. Okay, question number 1 to Scott on Uzbekistan. Once the London vehicle is listed, so the Templeton Privatization Fund, what's the difference between this Templeton Privatization Fund and the AFC Uzbekistan Fund? Would it be similar or competing?
Thank you. I don't know if it would be similar. It wouldn't be competing. If you look at the the companies that are in the National Investment Fund. So it's 18 companies. I think 2 of them are profitable. It's mainly infrastructure companies, power plants, financial services companies, some banks and insurers, leasing companies. The commodities exchange, which is one of our biggest holdings, is the most interesting company, and bar none, the most profitable among the agglomeration of companies that they have in the vehicle. So I look at it more like what Templeton did in Romania, where they had a bunch of dysfunctional SOEs, tried to turn them around, and then I believe it was 2 years ago, they spun out the hydroelectric company, which was a $1 billion plus IPO. So theoretically, the same could happen, but the Uzbekistan fund is more leverage to, I mean, profitable financial services companies. We have exposure in the private sector, the commodities exchange, and then materials companies, which are not part of this vehicle. So broad Uzbek exposure, I guess you could say similar, but very different in terms of what we hold, and I would presume performance as well, since a lot of these are, again, state assets that have ghost workers, inefficiencies, and the question remains is to just how much Templeton will be able to enact change in these companies.
Okay, yeah, I agree with you. Then question for Ruchir. How do you see the Pakistan stock market going forward post-budget 2026? Lower interest rates or is a scenario there, obviously. Also lower interest rate environment and recent rally to consider.
Yeah, I mean, the market's already rallied quite nicely since, the geopolitical tensions in India in May. So I think till the second week of May, the market was down 10, 11% in dollar terms. Now it's up 18% in dollar terms. So I had almost a 30% rally in around 2 months. So I think some of those positives you can argue and the price. I think the next thing the market will look at is the earnings going forward, especially for cyclical companies in the second half of 2025. And also what the State Bank of Pakistan does next week in interest rates. I think the market is expecting at least 50 basis points cut. And also in general, broadly on the economic reforms that the government has to undertake, because I think the market's done very well now, strong re-rating for the last almost 2 years. So, to drive gains further, you'll have to see earnings coming through, which I think they will. And also what reforms the government, continues with, and they don't kind of get complacent on that front. And just on another note, just to highlight the positive macro in Pakistan, S&P the news just came out, S&P just upgraded Pakistan's credit rating just a couple of minutes ago. So that just reflects the strong macro outlook for Pakistan compared to at least a couple of years ago. So I think overall they're in a pretty good spot for the next probably 12 to 18 months from a macro perspective. And the market should do okay. So yeah, not like 87% gains like last year, but I think, double digit 15, 20% gains are possible in Pakistan with a 12 to 15 month view from here.
Okay, thank you. Vicente, how do you see the rally in Vietnam going for this leg? It seems like it is still mostly driven by property and broker companies, which are the usually speculative targets, or basically the targets by the retail investors.
Yeah, thank you for the question. You are really an expert in the Vietnamese stock market. Actually, yeah, this rally is driven by the property and broker company. And as a market like Vietnam, the speculation always is it. However, this time, as I said, it's really completely different against the other time in the past, because right now it's supported strongly by the economic growth, and the most important thing is the loosened monetary supply. The government decided to increase their inflation targets from 4.5% to 5%. It means they sacrifice the inflation to push the economic growth. So 40 billion US dollar, no, around nearly 50 billion US dollar was pumped into the whole economy in the first 6 months. So it's mean 13% GDP, our GDP. So a huge money pumped into the whole economy to push this economic growth. It's the reason why the stock markets go up. So I think not only stock market, the real estate market also go up. So it will be completely different against the previous time.
Okay, thank you. Yes. Ruchir, what is your view on Kospi?
Yeah, I mean, stock has not done very well. Obviously, the person who's asking the question was stock has not done well. Yeah, I think Kaspi is going through a bit of a transition phase with the Turkish acquisition. Also, I think given the fact that the central bank in Kazakhstan has been raising interest rates, that's not very good for their business model with respect to consumer finance. So that's kind of hurting their profitability over there. So seeing a bit of a slowdown in the Kazakh business overall also. So yeah, I think if and when the Kazakh macro turns around, especially if interest rates bottom out or start getting cut, that could be positive for Kaspi. They're going to announce results basically in the first week of August. So one can get a better idea as to how the outlook is, because they downgraded their guidance for earnings growth for the first time ever since the company got listed in the previous quarter. So let's see what they do this time. But overall, yeah, maybe it's bottoming out, but I don't see. Yeah, you have to wait for some other positive indicators for that to kind of re-rate going forward. Yeah, that's my view on Kaspi as of now. It's not a buy, not a sell, but just hold on for now, I would say.
Yeah, it's very cheap. Yeah, it just needs somebody, a trigger. Okay, then we received a question from somebody. I don't want to mention the name. They're basically long 5 questions. It's about one of it. Is it possible, for example, to have you paid out in Singapore dollar? No, we only can do it in US dollars for the Asia Frontier Fund, in Swiss franc and euro. About the fund certificate, will one get a fund certificate that proves the ownership? You will receive a monthly statement confirmation by our fund administrator, Trident Fund Services in Singapore. And then there are 3 other questions, but I don't know for which fund you were asking. So please write back. So which fund you are asking for? Is it because we have 4 funds: the Asia Frontier Fund, Iraq, Uzbekistan, and the Vietnam Fund. So please rephrase the question again. Then one question for Ahmed. The market has been on tier for the last 2.5 years. Is it due for a correction? I think, yeah.
Yeah, I think we've, sort of logically, correction should come. Having said that, we've had, various corrections. We had, I think, one over last year for about like 15-16% throughout the year, and recovery there. I think, yes, I ultimately think there's always should be a correction, but however, I keep on being surprised. And one of the things I think that should be taken into account is that, yes, a correction is due, no doubt about it. The question is how far and how deep and how long. The thing is in the case of Iraq, is that one should consider that, the markets, yes, it's been in a tear. Yes, it's been very, very strong, but it's climbing out of a hole. Keep in mind, we've had 7 years of successive declines of 66.6% collectively. And so within sort of basically an illiquid market and a sort of a recovery, it's just like it just doesn't seem to want to stop. So yes, I think, but also one should take into account that it most likely will be shallow and not for long, considering one of the fundamentals and the fact of the market, as I said, it's climbing from a hole. That's always should be taken account in the case for Iraq. Thank you for that.
Okay, then another question for Vicente. How can Nguyen Group finance $67 billion US dollars? I think it's even more, whatever. So it's also, I was wondering, yeah.
Yeah. But according to their proposal, they will finance 67 billion. That 20% from their own equity is mean around 12 billion US dollar, and 80% is loan. So right now, Nguyen Group is already set up the WinSpit with the first initial charter capital of 500 million US dollar is already done. So when they commit with the government that if the government assign them to develop this project, they will put enough their 20% equity is mean 12 billion US dollar. So right now on the market cap of Nguyen Group, Nguyen Home, Nguyen Group family, so I think they can they can provide enough their 20% equity. I think so. Yep. And
Okay.
another, yep.
Yeah.
That's it.
Yes, please. Go ahead.
It's just a rumor. We do not know, but in Vietnam we heard much more about this project, and probably the government will not only choose the wind roof. It could be a roof of private investor, not only wind roof. So wind roof could be the largest one in the group, but not the only one. This is what we heard in our country. But yeah, it's just a rumor. We do not know until the government have the final decision. Yep.
Yeah. Okay, then there's another question. It's actually addressed to you. Vicente, any impact from Thai-Cambodian hostilities on your market? These hostilities which happened today and the north border between in Cambodia. And just I step in. I answer for the AFC Asia Frontier Fund. We have one holding in Cambodia. It's a huge producing gold mine, but this the gold mine itself and also the future stakes they have or deposits they are exploring, they're all in the southeast of the country bordering Vietnam. And so from the AFC Asia Frontier Fund point of view, so there's no impact because basically this company stock price is going up and down in tandem with the gold price. And so how about you, Vicente? Do you see any impact from this hostilities?
The impact on the stock market is almost nothing because the VN index is still going up very strongly. The impact for the economy, I think we have more benefit than the negative impact, because since Thailand they stopped providing electricity and fruit and other products to Cambodia after they have the conflict between two countries. Cambodia started to import electricity from Vietnam and Laos and buy fruit and other product from Vietnam, and so we are selling more product to Cambodia. Some kind of benefit. Of course, we are not very happy with the war. Another thing is the war between Cambodia and Thai is in the north of Cambodia to Thailand. But the Cambodia with Vietnam, we have the same border, but in the south, so it's quite far away. So actually, not really much negative impact. We have much more benefit, I think so.
Okay, yeah. Now you can export the fruits to Thailand or to China instead of Cambodia and Thailand. So you're benefiting.
Yep.
Yeah. Okay.
Yeah.
Now the last question to Scott. It's again Uzbekistan. Do you see consumer retail as a strong market? And do you think the convenience store format trend will follow as we have seen it in Russia, Turkey, and in other South Asian countries, for example?
Yeah, I mean, it's the most populous country in Central Asia with about 37 million and growing. So, and you've got decent density in the cities, especially in the Fergana Valley. You already have a group. Basically, this trend started 3.5 years ago. There's a group called Havas, and they're the local importers and distributors for Mars candy products. They've sprouted up everywhere throughout the country. Magnum was there, or Magnet was there for a bit. They just pulled out. Carrefour's pulling out due to competition. I guess they're bigger, but definitely you have Havas and you have a few other groups that are sort of on every corner. And now in central Tashkent, you have a Korean group that is setting up mini markets. I think they have 10 or 15 mini markets in the center of the city. So 100%, those types of consumer plays they've already gained traction, and now there's just cutthroat competition for real estate and for market share.
Okay, great. Yeah, we have overrun already. So this concludes our webinar today. And since we still had some unanswered questions, we will answer them directly by email, and especially this person who sent these 5 questions with the Singapore dollar and so on. Please come back to us. And if you have further questions, you can always reach us by email. I hope you enjoyed this webinar. We will continue to hold quarterly webinars in the future, and we will announce them in our upcoming monthly newsletters. And by the way, you can view this webinar and also our previous webinars also on our YouTube channel. Just type in Asia Frontier and you will find us. Subscribe to it. Would be very kind of you. Good night to our participants in Asia, and it's also dark here. The thunderstorm is coming, and the others enjoy the rest of the day. Thank you. Bye-bye.